Let's get more from Michelle Schneider, Chief Strategist at MarketGauge.com. Michelle, great to see you. This NVIDIA, let's put up NVIDIA. I mean, this seems to be a specific NVIDIA thing right now, but of course it's part of this tech war for technology dominance between America and China.
Well, yes, and of course, there's been a lot of talk about whether or not this is the U.S. way of forcing China's hand. Of course, China coming back and saying they'll fight to the end. So from the news standpoint and from all the rhetoric standpoint, I think it's really hard for us to determine how far this will go and what it means necessarily for the next week or two, particularly in the tech stocks. But if we step back a little bit, I really like looking at price action, and I find, and especially this year, that the price dictates the narrative. So anybody coming into this year looking at tech stocks, looking at NVIDIA, looking at the MAGs, saw that it was already starting to turn down in January, even before this tariff war started. Mm-hmm. And what made it so interesting is I wrote an article yesterday about the MAGs, which of course NVIDIA is a part of, that it would enter a death cross, which means that the 50-day moving average that a lot of people watch fell below the 200-day moving average. So what does that mean? It means that these have been now officially sealed as a bearish phase. And why is that significant? Because all of this is happening in the face of the news. So the news, of course, is confirming what we're seeing in the price. So the question is what happens from here? And there's a couple of things we can talk about with that.
That's interesting. So just remind us, the death cross, it always sounds so ominous. What does it mean again? What's the definition of that?
A definition of a death cross is when most institutions watch two major moving averages on a daily chart. They watch the 50 and the 200. So when the 50 breaks down below the 200 as you're looking at a chart, that's called the death cross. And so a bearish phase, of course, is when you're entering a period emotionally of despair. And the good news about bearish phases is that eventually optimism returns. And I think that's what everybody's looking for now is who breaks first? Does Trump break? Does she break? And what happens for NVIDIA in general? So if we just look at that chart, specifically that chart, actually, if you're comparing it to a lot of other instruments that are trading in the U.S. throughout the board, it's done relatively well in that it's still in a strong 2-year business cycle. That's what we have to watch for. It broke briefly in the early part of April when we had that big down day, came back. So what we have to do right now is we have to watch like 90 level. A lot of buyers came in at 90, looking for 90, thought that was the absolute bottom. And it could still turn out to be. I mean, NVIDIA is down, but it's still trading at around 104 pre-market. Mm-hmm. If it breaks down in a bear market under this 90 level, then what you can say is that whatever the news you're hearing is that the bear market is starting to accelerate in nature until we get some sort of event that stops it and starts to reverse.
What about ETFs and the Mag 7? Has there been big volume in ETFs that try to track those tech stocks?
Well, MAGS is very popular, right, because it houses the Mag 7. Mm-hmm. And of course, there are many people, and I've heard even on your show earlier, that who think that this is a buy the dip type of situation. And that is really dangerous now if you're looking at the chart until you see some type of settlement. And I'm not talking about active investing. I'm talking about people who are saying, oh, just keep buying it and put it away. And I always wonder who they're talking to, right? Mm-hmm. So if you're looking at it, right, because how many people have those type of deep pockets that can sit through now what we're seeing over a 20% drop from the high to a 30, 40, or even 50% drop. So that's what I'm saying here is the MAGs in general have shown a downtrend, while other instruments in the U.S., more USA-made stocks, have actually tried to base. Mm-hmm. And can we see NVIDIA fall much further? Well, actually, if you look at that chart under 90, we had an April low of 2024 75. Mm-hmm. And what if that breaks? Then we can go down to 50. So I just want to always be the counter voice to say, don't buy a falling knife. It's one thing, like I said, active, but if you're looking for a generational opportunity, wait for things to settle down.
What about gold, Michelle? Does it interest you right now?
Well, and that's something that I have been very interested in for about 3 years. Absolutely the opposite of what we've seen over the last year in the tech stocks. That really actually peaked in July. August has, gold has been basing, rallying, basing, rallying, basing, rallying. And here we are now at another new all-time high. So even that has a story. It does look good. Of course, it's scary, a little bit nosebleed territory up here. I'm particularly watching the gold to silver ratio, which got up to historical highs at around 102. Now it was back down under 100. I think if you really want to see the next play, you can certainly chase gold up here, but be very careful. But I would still be watching the silver market because that will tell us whether or not we're going recession or more stagflation, how that is priced to gold. Under like 99 ratio, I start to think that silver might be the better investment right now.
Where are we? Sorry, I don't know offhand. What is the ratio right now, Michelle?
Well, as of yesterday, it was trading at around 100, just under 100, which means that gold is 100 times the price of silver, right? And so that's historically high. Now, in recession, silver being more industrial, generally that makes sense, right? That gold, especially as a flight to safety, would outperform that much. But stagflation, which is still very much on the table, could then start to favor the silver, in which case we would start to see silver start outperforming gold. When I say outperforming, I mean getting higher against gold in terms of that ratio. So instead of being 100 times less than gold's price, it would start to be more like 95 times less, 90 times less. And then we're starting to see a different picture.
Michelle, thank you very much indeed. I really appreciate it.
Thank you so much.
Michelle Schneider, Chief Strategist at MarketGauge.com. Coming up, Canadian universities are reporting a jump in U.S. applicants. That's ahead. More students living in the U.S. are applying to Canadian universities or expressing interest in studying north of the border. This comes as U.S. President Donald Trump cuts federal funding for universities.